Good evening, everyone. Welcome to the Hurley Investments Financial Services Commentary for Tuesday, September 25th. My name is Kevin Hurley, and I'm the managing partner of Hurley Investments. I do these midweek chats, these commentaries, to do the best I can to help you all understand what I'm looking at, why I'm looking at it, and what I see in the near future. Hopefully, it's going to be something that'll help you guys out. It'll be something that I can answer questions for clientele. I can make comments out there in terms of what I see, what I'm worried about, and how I'm trading. I do require some participation, so if you have questions, go ahead and jump in. And I usually start off with something that I'm worried about, something that I'm looking at, something that I see that I want to share or make apparent for you to also pay attention to in regards to what I see. With that said, any questions maybe about last week? And to let you heads up, last week I was just showing a bit of what I'm worried about here in the near future in our market. If there are any questions about last week, go ahead and type it in. Otherwise, I'm going to start off today talking about 2 up days in a row for total Hurley Investments clientele. How do I say it? For total monies under management when the S&P was negative. Now, I know some of you are going to say, but Kevin, the Dow was positive. That was today, because today we had, what did we have? We had the Dow up, 14, the S&P down 3.18, the Dow Jones down 69.84. Yesterday, I believe I took a picture of it. Let's make sure I've got that picture. The other day, I didn't snap a picture. Monday was down, 170 or something yesterday. And we were up, 4,694. And the comment I get is, well, you are up, dang it, you are up on a down S&P 500 day, but the NASDAQ was flat or positive. So my question is, when I get these type of comments, my question is always, well, what the hell are you comparing me to? Part of being a registered investment advisor is you always have to be perfect. As a registered investment advisor, you always have to be perfect. It's not fair that a money manager always has to be perfect. All I tell my clientele is, and it's pretty simple, I'm trying not to overpromise or anything, right? Is we ensure stock positions, can't spell, we can make money in a 2008 scenario, and we and we are looking / doing the best to protect your investments every single day. Every single day we look at individual portfolios. Every single day we are doing some type of research for the next best investment. Every single day we're seeing how we are competing against the S&P 500. It's not about being delta negative. And someone just typed that in. I think that was Abraham. In fact, that was Abraham and Lance. So let me just go through some of the stocks that I trade. Some of the stocks that I look at and I go, all right, this is going to matter. So today, Apple was up $1.40. Amazon was only up, and this is a spread trade, $40.19. Spread day trade. AOBC was up 26 cents. Bank of America was down 0.7 cents. See what else we have. Baidu was down 0.03 cents today. Disney was up 0.86 cents. Ford is killing me, down 20 cents. And we're talking at like 40,000 shares of Ford. I own a lot of Ford in my portfolios. Facebook only down 50 cents after having the owners of Instagram looking to go elsewhere. FCX up a whopping 25 cents. Let's see what else we have. Marvel is down 29 cents. We have, let's see what else we have. Under Armour down 25 cents. We have Visa up 47 cents. We have Zions Bank down 9 cents. For all intents and purposes, that would be, I've got a couple other ones in here, but that would be the bulk. I would say we have the IBB that was up 27 cents. So it's pretty spread out there. I mean, it's not like it's ridiculous. Amazon is a spread trade. But where I was going at with this is, for me, any day I can beat the S&P 500 or lessen the downside movement, I consider the day a success, whether or not clientele do. And it kind of comes down to following a trend. If we look at the Dow right now, let me insert a picture. The trend is still up. Yes, we're coming off of oversold, but we had some worry and some issues for these 3 weeks. These weeks kind of sucked. Pretty good drop in June after a raise up. Pretty good drop in April right after it hits options expiration. We have these steps. And again, it's really hard. If I can just be the first one to say it, it's really hard to be invested in a headline risk market where every headline moves the market. Sucks. I wish Trump would just leave his stuff alone. Well, Kevin, that's the Dow. You have the S&P. I can throw the S&P in here. This is primarily what I'm judged against, whether it's risk or not, whether we've taken a lot less risk. There's your S&P 500. 2 down days in a row. It was a lot worse yesterday, but it came back. Nice to see the market come back at the end of the day. But if you look down here at the MACD, it does look like we're going to go negative. In fact, it does look like we have some weakness in the S&P 500. I can go to the NASDAQ. And it's just trading sideways to down for the month of September. Pretty interesting month, because if you'd asked me what I'm worried about for the next week, what's happening this week and why, news. And the news involves a rate hike on Wednesday. It involves GDP on Thursday. It involves personal spending / income on Friday. Possible Canada NAFTA agreement. And really, that's going to come on Saturday. We also have mutual fund rebalancing this week. Not only that, but a pretty interesting article, a pretty interesting comment. The stock market has just undergone a major transformation. We have 2.8 trillion on Friday that shuffled into a newly created communications services sector. It leaves the tech sector. The tech communications a little bit different. It's moving FANG stocks into, and it's not just FANG stocks, but it is SEO. It's moving into their own newly created communications sector. So we won't be so overbalanced in technology. Technology will be more of the chips or the advanced AMD, the Micron, Oracle, those kind of positions. And I think it's really interesting that that goes into effect and will be moved over coming at the end of this week. So it's going to more balance out the weighting of the sectors of the S&P. I still think we're looking at a 2% drop in September. And really, that's just the average that I believe is 1.8. I think we're going to be a little bit different because of some of the rebalancing that we have to do. That means that the S&P, in my estimation for the next couple days, could come down and touch at least 28.52 from 29.15 right now. It will make a touch or it'll bounce and test the 50-day, all due to rebalancing and mutual fund movement. Not too shocking. That would be down 65 points from right now. Looking at 29, I might even think it might come down to 28.50, drop below for a day, and maybe we'll bounce back up for October when we'll probably bounce right up in October as we get people putting new money into funds. So nothing too major there, but I would think we're going to have some pretty interesting volatility at the end of the week. I still would say our markets are going to end lower this week, even though we have 2 days. It's just kind of common for this time frame. Earnings, I don't have earnings in here. Not much by way of earnings, although I am pretty interested in JBL was today, Nike was today, and we had the home builder, KB Homes. Fuller Homes is tomorrow with Bed Bath & Beyond. On Thursday, we have Carnival, which is interesting, and Rite Aid, I really don't trade it, but I do keep track of it. BlackBerry and Vail are on Friday. So no real earnings that jump out at me. With that said, I'm kind of curious. I'm looking at my phone really quick. I'm going to Safe Option Strategies, Nike. Nike was up 52 cents. And then after hours, it's down $2.99. In all honesty, that kind of makes me excited to see Nike down. They did beat, though, as I read their numbers. Nike came in at 67 cents for their earnings per share. They were only expected to be at 63. Nike's profit tops targets, but margins disappoint. So let's take a quick peek and see what it tells me. Gross margin sank. So gross margin rose 50 basis points to 44.2 on the reported in-line average analyst estimate. Numbers are good, but we weren't wow enough. Boy, that's disgusting for analysts to say that. The numbers are good, but we weren't wow enough, said Jeff Ashier, founder and portfolio manager for Ashier Asset Management. The company's demand created expense or cost related to advertising promotion rose 13%, overpaying Kaepernick, if you ask me. Revenue rose 9% to $9.595 billion, being estimates of $9.94. So they beat top and bottom line, but their gross margins, which obviously are going to take a hit when you roll out the new advertising that cost money. So as happy as I am to see Nike down, it is for the wrong reasons. It really is for the wrong reasons. They beat top and bottom line. I'm assuming their guidance was in line. Anytime you roll out new advertising, you're going to see a hit. So that's just kind of common sense. I don't know. It's not fair. It's stupid that you have analysts that act that way. We had the FHFA housing price index that came in at a 0.2, and it was estimated to be a 0.2. Schiller was today, which came in at 5.9 when it was supposed to be a 6.2. And the big number, which is confidence, which is a big example that we're got to be really near a top. Consumer confidence came in at a 138.4, when it's expected to be a 131. I would seriously suggest everyone go and take a peek at last week's myhurleyinvestments.com. Spend some time going over where I talk about us being at a top. I would expect a rate hike possibly now or October. I would have thought it would have been October, but it sounds like the market is pricing in a rate hike tomorrow. We have initial continuing claims. We have durable goods, which I don't think is so important, only because we have GDP deflator, and pending home sales on Thursday, and then on Friday, PCE prices, PCE core prices. We have the Michigan sentiment, and more important, personal spending and personal income. Nothing stood out to me on the international. That doesn't mean that there's not international stuff going on. It's just a matter of nothing that I see that makes me worry. Nothing that I see that I would worry about or think, hey, something we need to pay attention to. In fact, as I asked Michael and I asked Keeve what we might want to talk about today, both of them said, Kevin, not much has happened since last week. There's not a lot to really go on that it's all building up to tomorrow. Tomorrow, Thursday, and Friday. Those are the important days. Not much to speak on since I spoke last Tuesday. So it's been kind of a tough idea. Hey, what can I share with you and where can we go with it? How am I looking to trade? Still protected for everything. We have a question that just came in. If there's a rate hike, what would you think to do? Nothing. I mean, we're kind of expecting them. You'll probably see a knee jerk to the downside, and we'll have the opportunity to come back on the next day. Again, a rate hike will be a move to the downside in a knee jerk reaction, even though it's expected, and we seem to be making it back up the following day. So if we do have a rate hike, we'll have a pretty good down day tomorrow, another 1% on the Dow, 0.5 to 0.75% on the S&P. The NASDAQ swings either way, probably more than 1%. We might make it up on Thursday. If a GDP number is good on Thursday, watch us gain it all back on Thursday. Unless we're doing, you could see an exasperated or a bigger move based on rebalancing. But when you say what to do, for the most part, I'm already protected. I've got long puts on just about everything except for Ford. I do have them on Apple. I do have them on Baidu, Visa. For the most part, I'm sitting and I'm protected. I went over with you about the major change We have the Mayflower Advisors, Larry Glazer, who I think is rather important. Don't expect FANG stocks to keep carrying the rally. Pretty interesting because he works a lot of numbers, but it just comes down to there usually is some rotation. And he also thinks that the sentiment is getting out of hand. Pretty interesting because for the first time you're seeing a bull in the market really say, hey, look for some other sectors to rotate money out of. What else do we have? I have China reveals a new party line. We're trying to save the world. It's kind of funny because I actually thought Trump today was fabulous at the United Nations. It was obviously America first, but he did mention all the money and all the good that the U.S. does do. So very interesting. I was proud to hear my president's comments, something that personally I wasn't so proud to hear of through Obama. I may even say that to the Bush that preceded Obama, but it was really good for me to hear Trump today. Pretty interesting that China revealed a new party line, trying to save the world, 91-page document. All this means is that the world hasn't decided who's going to be the bad guy in this trade dispute. I will tend to lean on this is hurting China more than us, and I think they will come to the table, but I think we have to open the door. I think to save face, we have to open the door where Trump, if he would just let his ego go a little bit and just say, hey, I need to talk with you guys. I need to talk with you guys so you can help me put this to rest. He has to give them credit. He has to let them save face. If he doesn't do so, it's going to get worse. Fed expected rate hike twice this year, and the risk is a policy mistake. Pretty interesting, but it's a great article about what it does to our economy with rate hikes and the Fed funds rate. Pretty interesting article on a longtime bull, Jerry Siegel, warns that a correction is coming. Kind of validates what I thought yesterday. And a little bit on 401k, and I really just put this in here for the chart on how much you should have saved. Technically speaking, if you are looking at the standard expectations from a money manager. And I just put that in there really for you guys to see. Any questions I can answer for you guys tonight? What questions do you guys have for me? Lance, thoughts on Bank of America, Ford, and Apple? Surprised you didn't put Disney in there. So I'm going to bring out a little bit bigger charts for some of these. Let's go with Apple first. Apple at all-time highs. I would assume Apple typically does very well running into the Christmas season. So if I was just to pull out a bit of a chart, and I'm going to do a highlighter here. We seem to have had a run on Apple. We came down this year. We came down in 2015. We had a run in 2016. Give me a quick second for this video to stop. And it looks like we had a muted run in 2017. So I don't know about Apple. I'm still there. I will be protecting in through earnings would be my best answer. If we took a look at Bank of America historically runs towards the end of the year can have some really big runs, but I obviously like the run in 2013 on Bank of America, 2014. Obviously, you have it in 2015. Huge run, 2016. Still had a run in 2017. Bank of America has been very flat this year. I would expect Bank of America to be trading at least over 35 here in the by the end of this year. And then you had Ford for your last one. I may throw Disney in too. There's Ford. Ford is all over the place. Bounds, well, we're at 5-year lows. So if you ask me, other than there in 2015, where it looks like it had a blip down to $8.68, I would expect Ford to go higher, but probably not above 10 by the end of the year. I also want to put Disney in there. I think Disney's finally going to make its run and break that 115 mark. And I think we're off to the races at 135. So I threw Disney in there. You didn't mention those, Lance, but they're my thoughts on some of those stocks. Tesla, Netflix, your opinion, please. I would never trade Tesla. It has been so distorted on a fundamental basis. I can't get behind Tesla. That's one I missed. Netflix, I also think on a fundamental basis is a really tough one to trade. Fundamentally, they're not a sound company, but I have been in Netflix in the past, and I've just missed the run, from all honesty, $75 up. If I look at Netflix now, it seems overpriced. I would be looking for an entry point into Netflix down probably around, if I was just to look at the chart, boy, 369. Look for a round number entry at 300 or 315 to test the 200 day is where I would be looking to get into Netflix. I just can't see a price point right here that to me justifies an opportunity in Netflix. In fact, if anything, with the big run up, I'd expect a pullback here sometime in the near future. Good comments, though. Good questions there, Abraham. Let me know if I answered your questions there or not. Any other questions you have? What am I in Amazon? Interesting question. And of course, Lance, I'm sure you're probably following the safe option strategies. I have a client that put the trade on. I put the trade on myself, and then I put it in the client's other account. So we're in Amazon at a 1950, 1957.50 bull call. We've adjusted it once. We're sitting roughly at about a 660, and I think I have us pegged to get out of it at $7 or $7.10 to get about a 10% return on a stock that Amazon has just moved all over the place. What a bummer for Jeffrey to have been in this one and just watch the stupid thing go all over the place. Tough one to trade. It does not act like Apple, and it's been that one has been pretty difficult. All right. Well, hey, guys, if there are no more questions, I appreciate you being here. I'll get this up and going. Look forward to seeing you the beginning of next week, and we will go from there. You guys take care. I'll talk to you then, and let's go from there. You guys have a great evening. Bye-bye.